Okay, this is a follow-up video of what happened in the Aussie dollar this past week. It's a follow-up video to the first video I did where I was really mad at myself for missing some really nice trade entries. And but after watching that video several times, I wanted to do a follow-up video to talk about some of the things that I have on this chart that I didn't get to mention in the first video. And that's the purpose of me doing these videos is for me to really see myself think and understand why I'm making decisions and how to make decisions. So I started off by, reviewing what happened earlier in the week, and really Monday was not much of a trading day. It was a holiday in the United States. Um, but there was still Forex being traded. And what it showed us was that price um, was moving up, and it did. And so, what I really want to get into is so what really happened, and how to really read stuff. Let me clean this up. I'm just gonna get rid of that, and let me get rid of that. I'm going to focus on these higher highs, lower low, lower high, lower high, lower high, and what really does it mean? So where did price not go? Once we see um, a once I see a structure level get violated. So price, the open in the Asian session, price moved up sharply, and then into 12 o'clock, 2 o'clock, 3 o'clock here, price again uh, continued moving up sharply. So Monday, not much happened. Came up, formed as high, and then it broke it. And it broke this level pretty impulsively. This 2200 hour, 10 o'clock, 15-minute bar, boom, impulsively break it, and that should tell me that um, looks like price wants to go up. So then I say, okay, I don't know any of this. What do I do know? At the point that that happens, I am looking at my chart like this. So I could say impulsive bar moving up. Well, now I could say, well, look for the lowest low, which was here, and maybe draw a line and connect points. So here's the low, higher low, higher low, and another higher low. So I could draw a line like this. And then I could say, okay, so now coming back here, just gonna extend this a bit more. But the point was there. And I know this because this is what's happened in the past. So and I know also that this bar has broken off this resistance level impulsively. So I could say this is looking very bullish. And I could say if price comes back and test this once resistance level, take a long trade. And if you're wrong, I would not want to see price go below this line. If price came to this line, below this line, it would mean this was a false break. And I would be wrong. So you take a trade off of here, and your entry would be right on the line. And you go below the swing point, and that's a 22 pip stop. So you would be looking at least 1-to-1 ratio, and it would have been there. And you could just set it, forget it, and take that. Or if I was managing trade, which I want to do, I could see that this break of resistance impulsively came back and tested it, and I got in. And I know if I'm wrong, I want to get out down here. And it then followed with a break again of this recently created high. And not only does it break it, but it breaks it impulsively like it did here. So now I could say, well, this is looking more bullish. And if I want to turn this trade into a risk-free trade, I can move my stops up to break even. I can move it down, move it to maybe below here, or you know, and just move up my targets. And then we form a flag, which breaks, and it continues up, and it continues up impulsively in this bar. And then it comes back, and then it tests this level here that it just recently broke. And the pattern repeats itself again. And there's some additional pips there. Now that's what happened. But what didn't happen? What didn't happen was price did not come back down here. And it means something. It meant that there was so much buying or lack of selling that price kept moving higher and higher. As price kept moving up, the sellers were not coming in and saying, I like this price level. That's why these impulsive moves happen. And that's why when you can draw these lines, see that structure is broken, see that it's broken impulsively, feel comfortable, take a trade. If you're wrong, you're out down here. If you're right, it pays. So, what happens? It goes up and it forms this higher high. I'll clean this up a bit. Goes up and forms this higher high. And it comes back down and it tests this area here that produced the higher high. And we would be right in assuming that this would be a safe place to take a long trade because it's coming back right into it. You could have taken a trade anywhere in here. You could have waited for this bar to close. But we would be right in assuming that this can hold because it went up and it produced a further higher high. But then the analysis, and this is where skill and talent and patience and focus and discipline and belief in your system comes in, is that when it does come to this level and this level holds and it moves price up 22 pips, what does it do? It does not create a new higher high. It did not go and break this higher high. And so what did it do? It came down, and not only did it come down, unlike the previous time, it came down impulsively. It came down quickly and sharply. Now we know when price moves this quickly and this impulsively, we know that it's signaling that price may want to, it's got more strength to move in that direction. And we just went through the opposite of how we saw price move up here, a solid 50 pips. So we see that this level hold, and then we see that it creates a lower high. And I see that it comes back impulsively and breaks it and closes below it. It closes below this price level here that produced a lower high. So now I've got to start thinking that I've got a break of structure impulsively. I've got structure. Let me begin. I've got a structure holding, but it only produced a lower high, which then came back and broke the structure with a close impulsively, and had a pullback, which produced another short-term lower high here, which again came back impulsively and went even further deeper in the retrace. And so I could then think, okay, well, maybe that it wanted to come back further here, um, and then take up. So I said, okay, we'll watch this now, if that was the case. But in this level over here, holding up right here, it held, yes, but what did it do? It produced another lower high, and that moved price back impulsively back down. Here are two impulsive bars, this bar and this bar. And now I could be confused because the following bar wipes those two out. And I said, okay, what? This is impulsive. So now if that's impulsive up and it wipes out two down impulsive bars, this has got to be stronger. So then you say, okay, for this to be true, that this is now going to continue up, I would need to see a new higher high made. I would need to see a previous lower high broken. And not only did it not get broken, it didn't even come up to it. In fact, it came up and formed a new lower high. And from that new lower high, price came back down and impulsively broke this structure level and this structure level, which was a little confusing because of the size of this bar and the way it went back up. But I've got to start believe a case is being made that this looks like prices wants to go down, that the bears are in control. More sellers are willing to are liking the price to sell, to take a short. So now I've got to give up and believe that price is going to go down. So the ideal entry would have been to take an entry in this area here. Now why? You can't just say that because it's hindsight. Because a case is building, Nazar. Because so many things has happened. What has happened? We've seen price move up and formed a higher high. and has not on 1, 2, 3 attempts go and it get close to this highest high. In fact, it's forming lower highs, and each of these lower highs is producing new lower lows. This one here, and then this one here. So if we have new lower highs, new lower lows, break of all kinds of structures, break of structure here, break of structure here, break of structure here. Let's label those, the break of structures. 1, 2, 3. This is structure 1, this is structure 2, this is structure 3. So then I could say lower highs, lower highs, lower lows, break of structure. This would be a nice time to apply a Fibonacci on a retracement and watch to see if it holds. And I could say I'll take the 618, or I could say I'll take the 786. And it's not arbitrary because price is showing bearish tendencies. And the risk is very low. If I wait for this bar to close, I could then say, okay, I'll get in on this bar. Like, so, well, no, this bar is still moving up and it formed a new higher high in the short term. So let's wait for that bar to close. And that when that bar closes, it leaves a pin bar. So now we've got a pin bar to add, a bearish pin bar to add to my analysis. And then you could take an entry in one of these two bars. And it's got to be a quick entry. But the bigger entry, without being stressful, is just to see that this is happening and place my order there. Put my stop above this lower high, 14 pips. Target the bottom here, 30 pips, 2-to-1 ratio. And then watch how price moves. Price moves impulsively down. So that would suggest that I'm in the money, I'm good, my analysis has been right, price did not go above here, which would have suggested these structure levels, these support levels would have held and pushed price that way. In fact, the structure levels, the support levels are falling apart and it's pushing price down. And so if my target was down here, maybe I could adjust the target and leave my stop as it is. It's still a good ratio. 14 pip stop, 2-to-1 already. Or I could bring my stop down to break even if I'm worried, but I want to gamble. Or believe in the analysis, not gamble, but believe in the if you're analyzing to this level and seeing the analysis, it's not gambling. And then look at this impulsive move. The thing is, in here, there was no entry. Other than just on faith, seeing all of this has happened, know that it's factual, it's already occurred, it's there, you can analyze it and just take a trade on faith. But if you couldn't take a trade on faith here, this is not a good place to take it. Now I've just got to wait. Because there was no entry here. The entry signals were from up here with the lower risk. And boy, look at Friday. Didn't just sideways, and you had 3 here. Look at that. And drop away. But what I really, really want to get into, and this video is running on, is what price did and what price didn't do. What price did do it kept creating new lower lows, breaking structure, breaking support structure, creating new lower highs, not going up here. And it means something where price didn't go and where it did go together. And that's something that meant that it was telling me was there was a potential here for over 140 pips target, over 100 pips. Even if I go in this one, over 100 pips. And this one is valid too. The other ones down here are a little bit tougher. This is valid too because you've got this new structure here, gets broken, come down, and retest it. And retest it. "38 holes." This video is getting on. It's now 21 minutes. But I've got to take my time and look at the charts and see what has happened. And then go through it and say, okay, that happened. But what didn't happen? So I would have reasonably expect that this would be a support level. And you could take a long trade here. But if it doesn't break the previous high, then it means something. And then if it comes back and it breaks it impulsively, it further adds to what that means. It means that maybe this uptrend is over. And this is just a short-term uptrend. It's only the 15-minute chart, but I mean, this applies for the way I want to trade. I've got to stop picking up 5 and 10 pip trades and target these 30, these 40, these 50, these 100 pip moves because they're there. The analysis is there. If I was wrong on this trade, it would have cost me 12, 15, 16 pips, 20 pips with the spread. And if I target back the bottom, it's 2 to 1. If I target this red line, which we know it's pretty significant, it was drawn in, price likes to move from one extreme to another. Target that red line, 62 pips. So you're looking at 5 to 1, 4 to 1. I'm not going to be right every time, but if you're getting those kinds of odds because of the story being told here, I owe it to take the trade. If this is what I want to do and be good at it. Okay, really running on. Let's pause this stop here and see how this turns out.